One of the things I do every single day, typically every morning, is I'll literally just go through the pairs that I track on a regular basis. I'll just go through and take a look at the daily charts. The emphasis on the initial scan through is on the daily time frames. And really what I'm trying to do, what I'll take note of, and I'm going to take note of it now even as we're doing this chat, because I'll just essentially make it my evening scan, my Forex PM scan basically. What I try to do is make note of those time frames that actually have a directional bias or a trend still clear on the daily. And I'll pay particular attention to those. Secondarily, I'll look at pairs that might be dealing with a 200 period simple moving average on the daily or the 200 DMA. And then the third type of look I'll kind of make note of are those time frames that are in transition. They may have been trending, but they're trying to get sideways, or they were sideways, they're trying to regain a trend. So those are the three types of market scenarios that I'll make note of, and in that order. Primarily I'm looking for the trend. So when I see something like the Aussie Swissy and the downtrend here, this is a market that I'm actually already short, and I'm looking for more continuation to the downside. So I'll make a note of a pair like the Aussie Swissy because it's got good directional bias, in this case bearish directional bias. If I can set up a trend following short sell, I'll do so across any time frame. If I can't, I'll keep in mind that any long position, when I have a daily time frame that is heading lower, any long position would be counter trend. So I have an overall downtrend here, but if I was looking for a buying opportunity, it would have to be limited to the 5, the 15, or the 30-minute time frame, because I want to stay nimble, I want to stay short term, and I want to be able to be conscious of the fact that the overall trend is down, and if I were looking for some sort of buying opportunity on these time frames, that would in fact be counter trend. That's really important, again, to make note of. So Aussie Swissy would end up on my directional bias watch list. But the question here is also, has there been an accelerated trend? Now, there was actually, and I want to show you how we recognize that. This is going back a little bit, but again, I want to make some current analysis here as well. So we had a move right there. We had the acceleration. You can see the red candles, the large red candles that moved down rather swiftly. Now, when I talk about an accelerated trend, what we're talking about is a move that is typically outside the typical pip movement range. How would you know what that is? Well, you could use your auto chartist, which you have access to as an IBFX client, and you can look at, for example, we're looking at the Aussie Swissy. You can take a look at the Aussie Swissy in particular, see what the typical price movement range is per hour, per day for this pair. So I'm actually creating a search criteria for the Aussie Swissy, and then I'm going to go ahead and take a look at the analysis. And again, what I'm trying to do is see that when I get these pronounced big down moves, or even if they're up moves, when I get these pronounced down moves, are those outside of the typical characteristic for the pair? When I click on the view analysis, two things I'll do. One, I'll look at the movement per day, and I'll look at the movement per hour. Now, since I'm looking at a daily time frame, the movement per day is probably more in line with analyzing the daily, where we seem to be operating somewhere between a 65 to 80 per day average price movement range. To the high end, we could be just over 100, close to 110 pips per day. So when I see a move like this, with a high, you can see here, of 97.30 and a low of 95.97. So you're basically looking at a 100 133 pip move. Okay, from 97.30 down to 95.97 in one day. That's the high to low range. Now, how does that compare to the typical movement per day of week? That's way out there, right? That's way out there. So if I'm looking at this acceleration that occurred in the Aussie Swissy just on one day, this was on 10/1 of 133 pips, where the average move is about 100 on the high end. Average move on the high end is 100 to 110. We're operating even beyond that. We had another pretty dramatic move down here, which took us from a high of 95.62 to a low of 94.43. Okay, so with a move from 95.62, okay, down to 94.43, we're talking about 119 pips. Okay, only 119, right? Only 119 pips. And this was on 10/5. So again, how does that compare to the typical pip movement range? Again, it's on the high side. So in a downtrend acceleration of 1, 2, 3, 4 candles, 2 of the candles were on the extreme in terms of not only the average but the high average. Again, how am I getting this? I'm not getting this by some subjective analysis of saying, oh, that's a big tall candle, right? We're actually looking at the historical likelihood for price movement for this pair as AutoChart is reflexive. So out of a 4 candle move lower, 2 of them were extremes. Okay, in fact, I can even look at the move on 10/4 with a move from 95.94 down to a low of 95.94 down to a low of 95.21. So that's not as dramatic a move. We're only talking about here a 73 pip range. So that 73 pip range, if you take a look, this candle right there, this is 10/3. Again, 95.94 to 95.21. How does that land in our average? That's right in the sweet spot, isn't it? In fact, it's kind of on the lower even end of the average. In fact, Tuesday the 3rd, I can even look at it particular to a day. Wednesday the 3rd, here, actually that's kind of on the lower part of the average. Notice the Wednesday is somewhere around 80 pips, so it's kind of in the lower part of the average. So I want you to notice we don't have to do this subjectively. We can take a very objective look at what is acceleration. So when people say something has gone parabolic, what makes me crazy about that is we have to know what is the acceleration. If an acceleration truly has gone parabolic, 2 things are going to happen for me. One, I'm going to notice that most of the move operates on the extreme of the price movement range. And 2, I'm going to notice that there's a significant space, a significant amount of area between, say, the 20-period simple and current price levels. So that the more space there is between the current price level and, say, the 20-period simple, which is the light gray line here on this chart, the more space there is, the more I say to myself, yeah, there's a pretty good look that objectively I can say it's parabolic. But it's a combination of that power stats analysis and the space created between the 20-period simple or my 34 EMA wave and the current highs in an uptrend, or in this case, the current lows in the downtrend. So is this an accelerated trend? I believe so. So when you have an accelerated trend, you've got to tell yourself, well, there's a good chance we may not correct all that much, but there's also the chance that there could be what we call a pronounced retracement. Accelerated trend, pronounced retracement. All right, that's kind of the theme here for today's conversation. Now, how do I define what a pronounced retracement is? Well, I use Fibonacci. And you'll notice and I've got the Fibonacci already outlined there because I had already identified this as, whether you want to call it parabolic, which oftentimes is such a subjective thing that people throw around to talk about the dramatics of a pair or any particular symbol for that matter. But I drew this because once we kind of accelerated here, I knew that we could make, from a pronounced retracement standpoint, a 50 to even a golden mean retracement. And we actually made easily a 50% and then went on to make a golden mean retracement. And if you notice, that's where my short sell was waiting. That's where my short sell was waiting. And that was part of the setup for this swing short trend follow of the Aussie Swifty that has an overall downtrend. But if I had not understood that the trend had accelerated, I might have been a little too aggressive about shorting the move on a rally to 9,500, a shallow 23.6% retracement, or a 38.2. Okay? I might have looked at a shallower retracement. I was expecting a much more significant bounce. And whether you use Fibonacci or whether you use a combination of major and minor psychological levels or 20-period simple, 34 EMA lows, whatever it is, when you see an accelerated trend, sometimes it's worth it to sit back and say, you know what, we might get a pronounced retracement. Let me go ahead and put an order, park an order at a spot at which I could take advantage of what would be a bounce that's probably a little beyond what the market might really think it's capable of doing. But had we not operated at the extremes of our daily price movement range, I probably wouldn't have even considered it. So that's a very important point to how it is I managed this short sell. That's one example. Okay, that's one example that ultimately led to an entry. So part of, again, what I do every morning is as I'm going through my list of pairs, what I want to make sure that I'm doing is making certain that I understand the three types of scenarios I'm looking for, and then step back and qualify which ones are trend following, which ones are transition, and which ones might be dealing with the 200-period simple moving average. In terms of the retracement and where I drew it, what I was looking for is literally what I call the last major move. That's the point. That's, you know, Fibonacci, I got to tell you, is extremely subjective. Okay, so last major move literally translates into, for me, and this is in terms of priority of the move too, most recent, significant rally or sell-off. That's what that translates into for me. So when I see a move that's already been retraced, like for example, let's mark a few highs and lows here. And again, everyone has a slightly different way of doing Fibo. It's all subjective. There is no one correct way of doing a Fibonacci. By no means is there. It's just different levels that people will either say that's a minor high or a minor low, or this is a move that I want to see the retracement of. So obviously, since I'm looking for a retracement, I'd like to find as unretraced a move as possible. And I'm going to go ahead and just label some of these highs and lows here real quick. So again, I'm looking for a last major move, which translates into most recent significant rally or sell-off. Okay, and then it kind of gets ugly in here between what's going to be D and ultimately E here. Now, when I finish labeling these, you'll notice I focused on the move from E to F. As I've labeled these highs and lows, I focus on the move from E to F. But some of you might say, well, why not focus on the move from A to F? The move from A to F was retraced already 1, 2, then we had the chop, and then we made a new low. This is not a last major move in that it was unretraced. Is it significant? No doubt. Is it the most recent rally or sell-off? It's not. Now, if I was just looking for the most recent rally or sell-off, I'd end up with tiny little moves. Okay? So what I look for is, again, a recent move that is as unretraced as possible. So when I drew E to F, in terms of that move lower, once the F low had been made, we had a little doji in there as well. At that point, I was looking for where the potential resistance may be. Again, so for me, A to F isn't really a valid, is not valid for the criteria that I impose on how I draw my Fibonacci's. So that's why I didn't draw it from the mid-August or even late July high, whether that be A or C. Okay, that's why I did not do it. I'm not saying that it's not valid, it's just not the way that I like to look at the moves, okay? So, and of course, Fibonacci is so very subjective, gang. This is just the way that I feel that I'm going to get those decision levels that are going to be most impactful. So that's where that Fibonacci series came from, the E to F move. I got a question here from Fabio who asks, which time frame do I use to do the analysis, and what time frame do I use to make the entry? The analysis of the dominant psychology is done on the daily, so I know whether or not I'm ultimately trend following an up or down trend, or if the daily chart has no trend at all. I don't necessarily like daily time frames that don't have any kind of trend whatsoever. Okay, I usually don't like that. So right now, one of the entries that I have is a Swissy yen entry, and I've got a long position based upon a 1 hour. So to your question there, Fabio, I have a daily time frame here on the Swissy yen that I wouldn't call a strong uptrend. I wouldn't call this uptrend one that meets all of my what I call clarity criteria. Again, when I'm scanning this market in the morning, I'm looking for clarity. What I call my clarity criteria. And what I'm looking for in terms of clarity criteria is for my 34 EMA wave to actually have a clock angle of 12 to 2 or 4 to 6. If I have that, I'll ask, is it smooth? Is it established? And if there has been pullback, if there have been pullbacks, is it respected? So this one right away, you'll notice, loses out on the smoothness criteria. I mean, this is not a smooth 34 EMA wave. Is it established? It's been moving up higher since, say, mid-August. Is it respected? Even though we've had deeper pullbacks, the wave has been able to contain the pullbacks and act as support. So in terms of this particular market, we've moved on to the Swissy yen here. In terms of this particular market, I have an uptrend. I don't know that I necessarily want to trade this time frame, but I know the daily gives me what I call a directional bias. And that means even though it's kind of ugly, we are above the 200 period simple moving average on the daily, the 200 DMA, which does have a certain amount of bullishness that is associated with. I also know that since we have that shaky but I say valid uptrend, it opens up the possibility for trend following on longer term time frames like a 240 or the 1 hour, which typically I don't like to commit to unless there's a nice trending directional bias. So in this case, my way of adapting to looking for clarity on the intraday, again, I'm asking the same question. So once I ask that question, the clarity criteria of my daily, I'm going to go about asking it of the 240, the 60, the 30, the 50, and the 5. And ultimately, I liked the 60. The reason I liked the 60 is it was very near a number of actionable levels. And it had an uptrend that seemed to be nicely respected. And it was tested, but that was also when I got my fill. I got my fill on all that volatility. And then it's been climbing up since there. So I'm looking for an exit in this area around 92. We'll see if we get up there. It's about 20 pips from where we are right now. I'm looking for that move ultimately to that level. And you can see those levels here. I've already parked orders waiting for that. So I've got the order waiting there at 92 in case we get up there. We've gotten awful close, but haven't got there yet. And you can see my stop loss here down at the 40 area. So here is the setup. It's a swing buy. I took the bullish directional bias of the Swissy yen and I went with a 1 hour. Now, one of the things that I got to step back and ask myself is this an accelerated trend? You know, that was one of the questions I had to ask myself. Have we moved in such a way that I could expect a much sharper pullback at some point? Well, I wouldn't call this last move quite let's see, two large candles here. I don't know that it's quite grabbing a lot of attention yet, but it has broken that previous high, which it caught my attention, for that matter. So what I'll do is I'll go back to the auto chartist. I'll go ahead and put in the Swissy yen, or Swissy, Aussie Swissy. Oh, am I looking at the Swissy yen or Aussie? Okay, Swissy yen, sorry. It's been a long day. All right, there we go. Swissy yen. I'll go ahead and add that. Save the search. And again, what I want to do is see those two large candles we had here. Let's go and do some calculations real quick. So I'm looking at the move we had here. Now look, you know, I'm looking at a daily time frame. I had a move on 10:15 from a low of 83.61 to a high of 84.57. Okay? So actually that's just shy of 100 pips. 96 pips. The next move, that's a little bit more significant. That's a move, and this was the 10-16 move. I've got a high here of 85.57. I've got a low of 84.40. Well, this is a little bit more significant, isn't it? 117 pips. Okay, 117 pips. Now, how does that factor into the way the typical price movement is for this pair? Let's go to the movement per day. And we'll see, you can see right away, we're operating kind of on the higher end of that. Now, I just want to mention the 15th was Monday, the 16th was Tuesday. Take a look at the Monday price range. We were way above the Monday average and probably kind of near the high. You can see the high is 100 pips, very, very close to that high. So within the probability range, not exceeding it, but certainly on the higher end of it. Okay? Would that count as accelerated? I think so. What about the 16th? What about Tuesday? My Tuesday is much higher than my Monday range. My Tuesday range, I'd say, is about 115 pips. We were at about 107. We were at 117 pips. So again, would this be considered accelerated? Again, we're at the higher range of the price movement for that day. Would that be considered accelerated? Not dramatically so. We were within the probability, but we're definitely in the upper range of the price range. Not near the average, which is the band, but within the bar. So, somewhat accelerated? Sure. So one of the things I've got to think about at this point is what is the likelihood for a snapback, a sharp snapback at this point? That's got to be part of the conversation. So I'm a little torn as to whether I'm going to call this my low for the Fibo that I'm going to pull here with y'all. Here. Whether I'm going to look at that, or whether I'm going to look at, well, I should have called that A. I'll just call this Z. Right now the high is still up here where I'm going to put B. So I'm not sure that I want to pull from Z to B. And one of the things you'll notice is I do like to color coordinate darn near everything on my chart. These are projected support levels that the Fibo is showing. So Z to B gives me one set of levels. Let's draw that again. Z to B, there we go, gives me one set of levels. Interesting. What I like to do sometimes is look back at each one of these levels and see if they were adhered to before. A lot of times that you'll notice a Fibonacci kind of tells you whether you pull the right one just based upon previous support and resistance. Now again, what I like to do, because these are all downside support levels, is I do like to actually, I can get this thing to cooperate here for me. I do like to make this green. Let's try this again. I'm just making a big old mess right now. Let's go Z to B, and then on top of that I want to make the support levels green too. So let's go over here. There we go. Okay. So these are my projected support levels from Z to B. What about from A to B? I don't know that I'm seeing any big difference. I just know that this A candle low did retrace a little bit of this move, but it's kind of ugly. It's kind of ugly. This is probably the cleaner last major move in terms of being unretraced than, for example, Z. But I think you could probably use either one. I'm not sure either one is necessarily giving me a lot of help, except for the fact that you'll notice that my entry is very much in line with the 23.6 on the daily, right around the major psych level of 85.50. Now, again, subjectivity of Fibonacci being what it is, the Fibonacci really wasn't guiding my entry on the 1 hour. It was really a matter of the pullback into the wave and the major psychological level that I want to position myself up against. That was really what had my attention. So one of the things that I want to keep in mind with this 1 hour chart is if and when I do hit 86 again, which is my upside target, I do want to keep in mind that we could make a pronounced correction lower from that B high to maybe 50 to maybe 618. So I do want to prepare myself for a more pronounced correction. And interestingly enough, a move down to the 618 would fall in line with, depending on how long it takes, might actually fall in line with the 200 period simple moving average. So take a look at that black line cutting across my chart. Now, for those of you that are somewhat new to how I'm setting these trades up and so forth, I know this might be a little bit of an advanced discussion, but you can check out our YouTube channel, the Interbank FX YouTube channel, and I'm going to write down the URL right now, youtube.com/Interbank FX videos. So again, it's youtube.com/Interbank FX videos. So I have a number of, and that of course should be a period, I have a number of videos that are there that should help you all. For those of you that are new to the way I trade and my tools and setups, it should help you a lot with setting up your charts and getting a better idea of the tools that I use. There are Fibonacci videos there. There are videos on my moving averages and my wave and psychological levels, a lot of that. So for those that are curious, please feel free to visit that. So I am going to be prepared, even though I'm staying nimble on the 1 hour, staying intraday. If we start to exhaust and I start to see some serious movement to the downside, I'm not going to argue with this thing. We could see a pronounced retracement. I don't want to get caught on a short-term time frame. And even if I do find that I'm getting some weakness here, I might go ahead in that situation and set up a wave CCI reversal on the breakdown through 85.50. So if I think I'm going to start seeing a much more pronounced correction, the daily's going to have a pronounced retracement to 50 or the 618, I could set up a wave CCI on the 1 hour. Again, just another option that I have to manage a market that could very well make a move to the downside because it had accelerated quite sharply to the upside. These are things we want to be ready for. One of the charts that I was looking at for just this type of entry, a wave CCI, just to share with you since I brought it up, is the 1 hour Aussie US dollar. So the Aussie US was another one, was a pair that had been in an uptrend, and I was actually looking at a potential wave CCI if we break down through essentially 350. The level that I'm looking at would really be about 345. If we break down through 345 and we have a reading of at least negative 100 or below that level, I'll look for a short sell as prices break lower. So that's the way that sets up. All right, so I hope you're seeing how I put together a more objective look of what really makes a move parabolic, how to measure what an accelerated move really is. When you look at the context of a trend maybe moving very dramatically, how do you define whether or not it was accelerating within normal parameters or the higher end? Or how do you even know if a market's being quiet? Again, there is a way we can look very subjectively at that, and that's by using the auto chart as power stats. So you see me use it across a number of symbols here. And that's the best way, ultimately, to look and define what is an accelerated trend, and then set up and be ready for what could be a pronounced retracement. Because a lot of times traders get caught up in these moves that seem to be retracing very sharply. And this way you know, even when the market starts moving to the downside, if we start seeing some strong candles moving to the downside, you can go back to auto charts and say, okay, was this within normal parameters, or are we operating at higher volatility, higher panic, or higher greed levels? Okay? So that's just a number of tools that I use on a regular basis, on a very regular basis. Okay, we had a question about the cable, so I'm going to go over there, take a look at the British pound US dollar here. And the question was about this move lower here today. So anytime I see a pronounced move lower, obviously we're dealing with a pair. What was the driver of the move? Was it the US dollar or was it the British pound? That's one thing. One way we could determine that is by looking at other British pound correlated pairs, like the pound Aussie. Do we have that kind of dramatics on that pair? Yeah, we do. Not quite to the degree we saw it on the dollar against the dollar, but we do have some dramatics there against the Aussie. What about against the loonie? Again, I want to see if the pound sunk against something other than the dollar, because that might say it was a relationship that was limited to the dollar, which means the dollar might have been part of the driver as well. No reaction against the loonie, really. What about the yen? Okay, so I'm seeing it against the Aussie, I'm seeing it against the yen, but not as sharply as we saw it against the US dollar. What about against the Kiwi? Again, not as much. And then I could take a look at even the euro pound. Was there an acceleration to the upside there? Okay, interesting. So there was. So pretty good argument that this move had a lot to do with the pound sterling and not just, for example, a US dollar acceleration. Okay, that's the first thing. Was it really the pound sterling that was the driver, or was it another relationship? So I think the pound sterling was a big part of the driver. So what I like to do here, and this is kind of outside the scope of what we're doing for our chat, but what I like to do is I go to Google News, and I'll type in British pound. So I know the story here is one of the British pound. So what was the news in terms of the British pound? And I'll just start looking at what could be headlines that could suggest what the psychology was in terms of moving the pound. Now, we would do this as we see the move. Okay, here we have 15 hours ago, sterling rallies as UK retail. Okay, that definitely wasn't what was being discounted when we see the pound selling off the way it is. Okay. So it's not really, we also want to take a look at the economic calendar. Was there anything in the calendar? Retail sales were fine. Okay, retail sales here were fine. So when it comes to the British pound and the weakness, the retail sales story seems to be a headline, but that was not the way in which the pair was discounting some sort of news. Fails to react to on-target inflation. Look at the date of the news bit. Again, a lot of, here's 8 hours ago. MPC minutes on tap from 14 hours ago. So I'll just look at other headlines. What type of headlines were moving this market? And I'll just look at that. It might give me some insight into what the market is clinging to. MPC minutes on tap, that was just under a day ago. Okay? So, we have to remember a couple things. If you were doing the analysis of the British pound, would you be committed to a longer-term buy scenario? That's the big fear play, right? What if I was long this market? Well, take a look at the daily chart. Does this have directional bias? Not according to the wave. So I wouldn't be committed to a longer-term time frame long position anyways. We don't have directional bias on this pair. So at best, I'd be looking for some sort of setup across the 5, 15, 30. Those are the rules of my time frame selection. The daily time frame dictates that. So I wouldn't be long. And I can say that for certain because, one, we're in chop. Now, could I have been long on a short-term time frame? Well, that would have to be based upon those market trends. Okay, so it's kind of hard to go back in time and for me to be so super objective about it. But I'd have to look back at each individual 5, 15, 30-minute time frame and ask myself, was there a buying opportunity? Would it have positioned me long? And where would my stop loss be? And I want you to notice that before it sold off, it did chop around quite a bit. So this would have been a pure momentum situation. It really wasn't a trend follow leading into the sell-off. It was actually a non-trending momentum type scenario before the sell-off. We had this sideways price action on the 5, on the 15, on the 30. Okay? So I wasn't in the pair. I have to mention that to begin with. But again, you have to look at the daily. The daily will dictate what time frames you're ultimately looking at. The time frames themselves individually will tell you what type of setup that you're looking at. Okay? So again, no trend here, so we don't really have that accelerated trend, pronounced retracement conversation. This is chop, and in a sideways market, you really should expect volatility because the market's fairly vulnerable. Okay? All right, let's tackle a few more questions as I wrap up here. And let's see. And I know I missed a few of them from earlier on in the chat, so let me scroll up the chat log here. We tackle the Fibo question, tackle the time frame question. If you guys want more information, I mentioned the YouTube. And I think that's the questions that we had here for tonight's chat. Okay, so ultimately, what I'm hoping you'll do is put together some of these tools like the auto chartist, look at the individual candle movements, look at whether, obviously this is probably outside of the range, right? If I want to go ahead over to auto chartist, would anybody be shocked if this was outside the range? I don't think a single one of you would be shocked, right, to find out that we're probably outside the range of that, even on a pair that can be as volatile as the pound sterling against the U.S. dollar. I don't think any of you would be shocked, if I said, hey, look, just in a 1 hour period of time, we went from, let's take a peek here, a high of 1.6126 to a low of 60.53. Right? So we covered, what, 73 pips? So when I go back to my analysis, even the movement per hour, I just looked at a 1 hour chart, movement per hour, 73 pips in a 1 hour span. There's my 1 hour sell-off. Is this outside even the highest high ranges for this pair? Absolutely. We end up somewhere just below 50 normally. That one was up near 73. So that 1 hour move at 73 pips was definitely larger than our typical, what would you call it, 47, 48 pips on the high average. So yeah, for sure. So was that an acceleration that we would want to be cautious about, or at least want to make mental note of? Definitely. Definitely. Okay? Could we expect a snapback in an environment where we don't have a trend? I'm going to expect anything. A non-trending market, one day makes the bears feel like champs, the next day makes them feel like chumps. Same thing with the bulls. One day they feel like champs, the next day they feel like chumps. That's what sideways chop can do. Okay? So you look at the market trend that it's in, and then you say, okay, in this market trend, no, that's not uncharacteristic. Good, great question, Bob. Definitely, that's not uncharacteristic. So thanks for your question as well, Ermelinda. All right. So, okay. Well, I appreciate everyone making time out in their day. Again, we talked about some of the pairs I'm actually in right now. Talked about the Aussie Swissy. Talked a little bit about the pound. So I just want to make sure that you all see this as active analysis we're doing in the live market. That's the best way to learn, and I hope that you all picked up a few tips and tactics that you can use hopefully tomorrow. Okay, these are all tools that you have access to as IBFX clients.